We've got a market flash on Union Pacific. The stock is surging after hours. Let's get to Seymour Modi for the details. Hey, Seymour.
Melissa, it really is. Shares of Union Pacific up about 6.7% after hours after the company announced it's hiring seasoned veteran Jim Vena as Chief Operating Officer effective January 14th. Vena has been a big proponent of precision scheduled railroading, an operating plan that is expected to boost the underlying performance of railroad players. Keep in mind, even with today's move, shares of Union Pacific have underperformed over the past 3 months, down about 9%, due in part to these slowing global growth concerns. Melissa.
All right, Seema, thank you. Seema Modi. Tim, where do you go on Union Pacific?
I tell you what, UNP, like a lot of the rails, actually finished the year with better volumes in the fourth quarter than people had expected. I think the rails, I think, first of all, a lot of the uber cyclicals have underperformed here. So if you're even neutral on the market, they should continue to outperform. And I think the rails actually have more than priced in a slower growth outlook. So I think you can stay there.
All right, Guy.
Norfolk Southern, I think, is cheaper on valuation. If you like UNP, and maybe this is an overreaction to the upside, but to Tim's point, more in terms of more granular, I think NSC on valuation is more interesting.
Well, the markets have been on a wild ride since the highs, with the S&P down nearly 13% from its peak in September, with some twists and turns almost no one saw coming. And if you're worried about more market turmoil, our next guest says there are 3 names you can buy no matter what happens next. Chartmaster Carter Worth is over at the Plaza with the names. Hey, Carter.
Hi, guys. So today's client report was 100 stocks to own, whether the market goes up, down, or nowhere at all. I've singled out 3, and let's look at them. The first is a sort of mid-cap stock. It's $6 billion. But the reason I like it, it's idiosyncratic growth, and it acts particularly well relative to the market and absolute. But here's a chart, no drawings or annotations by me. But what I would point out is all of this aggressive, heavy volume gaps and upthrust. Those are all quarterly beats, and that's a very positive and dynamic thing. But if you were to put lines on it, it has a well-defined uptrend. And what has happened is that typically on these lines, it has bounced. And this bounce, I would think, carries to a new high. So 1 of 3. Now, here is something that's large cap, $100 billion. It's fintech or whatever you want to call it. No drawings or annotations by me. I would draw the lines this way. What we have here is something that's been backing and filling to a point where something dynamic, I believe, is about to happen. And what I think that is going to be is this, up and out of this setup. But what's really important is now let's look at relative performance. If you look at this same setup, what's been happening is, yes, even as the stock has been sideways, what we really know, of course, is this. It is making new all-time relative highs to the market, a textbook breakout on a relative basis. That's ideal, and I think it gets resolved by an absolute move up and out of that formation. And then finally, a super cap name, low beta, a beta of about 0.75, mature growth. Let's draw some lines. I think you're setting up like this. A lot of tension here, but key is if you do break out from well-defined tops and then you check back to the level from which you broke out, that sets you up nicely for what is going on now. And then again here too, look at the relative performance. As McDonald's sold off with the market, of course, it is going straight up relative to the S&P. And that's particularly good given its low beta. Now, again, it's not just 3. There are plenty of good names. But no matter what you think here, there's always a stock or several stocks that one can buy.
Carter, come on over.
Thank you.
I thought in 2019 we were no longer making unilateral decisions. Did I miss
Why
that?
would that change?
Thought wrong.
What's changed? Now, you have to ask yourself when there's a
The
change.
year changed.
What?
The year changed.
Okay.
Sorry.
No.
That does not
No.
change, especially when it comes to Carter Worth. I mean, Carter is
Yes, help
in the
yourself.
pantheon
That doesn't change
of
either.
technical analysts.
Change either.
Gummy bears
So
2019.
we said these are stocks you can buy no matter what the market does. What do you think the market's going to be doing?
Oh, well, I mean, the market's been topping for a year, right? We had a blow-off top a year ago. That was the highest RSI reading ever recorded in the S&P on a weekly basis. Higher than 1929, higher than 1987, higher than 2000, and we never recovered from that. We had a classic bull trap. We made a slight new high in September, October, drew in a lot of money, and then the murder began. Worst October in 10 years, worst December in a generation or two. And there's a great long-standing phrase, bear markets are characterized by sharp counter-trend rallies, providing excellent entry points for shorts. We've seen this over and over. Did anything change because we've rallied here a little bit? Nothing. I think this is just the opening of what is likely much more to come.
So when you're talking about McDonald's and Etsy and PayPal, these are going to be, I understand that. That's why we tend to not eat gummies while we're on television.
Which is why you should ask if you should come over now. I'm just saying.
Anyway.
Work that gummy.
Yeah. It's sort of strange to think about some of these stocks as stocks that you can buy no matter what the market does.
Well,
I mean, it's just, you're saying that they will outperform relative to
That's
the
right, and we're absolute. But here's the thing, it's also knowing who you are in the market. There are plenty of people who must be fully invested by mandate, by charter, right? So there's that category. There are people who don't have to trade or do anything. Then, hey, you're probably better off in cash. I'm in the business of having to make recommendations both for institutional and retail customers, and there's always the requirement to find things to buy. These are as good as any. The list of 100 is good. You don't have to pick this one or that one, but most people want to find something to buy no matter what, because 98% of all capital is long only.
Right.
So just looking at Etsy, it seems so not your kind of name.
Yeah.
Well, it's just a momentum stock. I mean, I tried to remember the 100 stocks were all cap, all beta.
Yeah.
But it
Meaning, I don't really have a type of name. Do you mean a type of business? I don't even know what they do.
Okay, so that's interesting to me.
That's classic.
That's the point.
right.
Nor do the algorithms that are eating
love it.
everybody's lunch. They have no idea either. They don't know about
Okay.
PE, the DCF, the enterprise value, EBITDA. That's all going passé.
Just the
That's-
chart.
It's just the chart.
Just the chart, just the chart. Okay.
Carter, thank you.
Thanks, guys.
Carter Worth, Cornerstone. So we want to ask the traders now what their top stocks to buy no matter what are. Steve, we'll start with you.
So this was about a week ago I picked this one, GE, about 2 weeks ago. GE, it's already up 15% year to date. Oddly enough, I think a lot of the headwinds have dissipated. They're still there, but I think that everyone knows they're still there. And not even on a relative basis, on an absolute basis, this has outperformed the overall market. I think GE is a safer place to put your money these days.
Guy?
My pick would be CBW. I'm not sure if you're familiar with that tip.
I don't even know what that does.
Carter Braxton Worth. That's what
I thought it was cannabis related.
No, in any market, he does well. But if you make me choose, listen, MasterCard's had a huge move to the downside from 220 to 180. And valuation, yeah, maybe it's stretched, but that's been the concern with this stock since it went public. But if you look, revenue growth in the high teens, their transaction volume continues to pick up. So I think even if the tape were to sort of go sideways to lower, I think MasterCard's a safe place to be.
I'm going to break the cardinal rule. My own rule.
bringing him back
Bring him back. Bringing him back.
Carter.
Wow.
Carter's still
You didn't need another gummy,
What do you
did you?
think of these?
Well, there's
Okay.
What do you
more
think
there.
of General Electric and MasterCard as stocks to buy no matter
let's
what
talk
the
about
market
those two.
does?
One is something that has the prospect of being so bad it's good. I mean, a completely bombed out, that's like a Schlumberger. That's one way to find opportunity in this kind of environment. The other is a heretofore great leader that even as it's rolled over is making new relative strength highs to the market. It is in many ways the most reliable sort of cash flow that you can find out there, the most pure idiosyncratic growth, large cap growth. So if you want to go that route, I like them both in that sense.
Wow, CBW stamp
So
of
then
approval.
it's 5 stocks, not 3.
You just added two.
There we
You
go.
just added two. Tim, do you want to try and add to this conversation?
Well, I tell you what, I think J.P. Morgan is a name, and that may sound crazy. The financials certainly looked like they were in a lot of trouble over the last, say, 3 or 4 months. But if you look at J.P. Morgan, first of all, relative to its peer group, it outperformed by 10%. Relative to the market, it's flat. And to me, it's the highest quality name, certainly in the banking sector, but it's one of the highest quality companies in the world, and that's a name I feel comfortable with even through difficult times. JP Morgan is not a name I'm looking to cut out of my portfolio even the worst of times.
And I know Karen likes JP Morgan.
I
Does
do.
the chart master like JP Morgan?
Well, if
Brought him, whoa. You brought him back. That's crazy.
2019 is a new year, guys.
Oh my God.
Keeps coming back.
I might take
New
my
year.
jacket off and stay away. Listen, obviously, if you have to speculate with a really beaten down bank or go best in class, the J.P. Morgan is going to be.
Doesn't sound like he would be, though. That was a little lukewarm, man.
I think the financials
Yeah.
have bounced a lot already, and I'd be inclined to fade the group.
All right.